All right, cool. Well, then, if you want to start with the initial tweet.
So this whole back and forth started with Gwart making a viral tweet. His tweet was, "I don't see how VCs don't get annihilated this cycle, or whatever you want to call it. No one's buying these tokens. The mask is off. I really don't see any outlier 100Xs that can carry these funds. Just zeros across the board. There's no natural buyer for this vapor." So I responded with a quote tweet saying, "I've been a VC in crypto for almost 8 years, and I can't tell you how many times I've heard this crap. Fundraising for crypto VC in 2018, 2019 was brutal. No one is buying these tokens. The mask is off. I don't see any more returns in this bullshit industry, etc. Put your money where your mouth is and short the market if you think that. See you in 3 years and we'll compare notes."
Yeah. Okay. So the first thing I would ask maybe is, let me just like preface this maybe from where I come from. When you say short the market, do you think it's reasonable for me, like, let's just say that I'm acting as retail here. Okay. I don't know what that means, but like, would you say that when you say short the market, you mean short the liquid tokens in the market? Is that fair?
Yeah. I mean, short things besides Bitcoin, right? Because that's basically what you're calling out, is all the stuff being built in the space besides Bitcoin.
Yeah. Okay. All right. So I'm going to sound a little bit pedantic here, but I want to make like something very, very clear, which is that tokens are not tokens until they are liquid and tradable. Would you agree with this?
Tokens are not tokens until they're liquid and tradable. Sure. Yes.
Okay. So like they don't exist prior to them being listed publicly in some capacity. Now that may be on a DEX, that may be an airdrop or a Binance listing, but functionally what you are investing in are simple agreement for future tokens and token warrants, right?
Generally, we do sometimes invest post-token existing, but majority of our investments are pre-token launch.
So, I mean, I went through actually like Dragonfly's portfolio. So like I quoted tweeted again with like when you quote tweeted me and then I quote tweeted you with some charts. Okay. And it was just the first 4 of Dragonfly's like liquid tokens. Okay. So again, these are portfolio companies that you have that have liquid tokens. And you actually have a lot of companies that don't have tokens, but right now we're talking about tokens. So I went through this. Okay. And I looked at and we can talk about this methodology. You can push back on this methodology, but I looked at all the tokens in your portfolio. All right. And I looked at from when they launched to now. And I looked at, so the way I found
all of them or just the first 4?
No, I looked at all of them.
I found all of them. Okay.
I found a total of, and again, you may push back on this. I found a total of 44 tokens. There were some NFT projects that I just left out. You guys actually have a number of NFT projects, but I don't know which of those, like for example, Parcel is listed as an NFT project, but I mean, Parcel has a token. So I don't know why on your website. But anyhow,
it might be mislabeled.
Okay. So I went through all these tokens and, I took this perspective, and this is why I already know you're going to push back on this methodology, so we can talk about this, but I took the perspective, okay, let's say I have $1 million. Let's say I have $1 million to invest across equal weighted portfolio of all of Dragonfly's liquid tokens when they launch, okay, when they hit public markets. I'm being very specific about this. In terms of finding the prices, this is, I'm sure that somebody would dig in and maybe push back on some of the listing prices that I found, but I tried to take sort of a time-weighted average price over the first 7 days as the average listing price, okay? And, what I found was, had I shorted all of these liquid tokens when me, retail, could have shorted them, I would be up quite a bit, all right? And all right, Tarun's in here, but we'll carry on this conversation.
Okay.
Tarun, welcome. And so, like, one way I did it was, okay, if I shorted this on 1x leverage, but let's take a slightly different perspective, like what I said from the beginning, which was, I have $1 million to invest across a liquid portfolio, every, equal weighted across all of Dragonflies. And what I found was, I think that $1 million would be worth somewhere around $240,000 now. So I think,
if you were long.
if I was long, correct. Yeah. So, yeah. I guess like, maybe, I don't know if you have any initial response to that, or, maybe my first question would be like, you say short the market, and it's like, okay, this is what would have happened had I shorted the market that ostensibly you have conviction in, right? Your portfolio tokens. And again, these are the ones that I found, but I'm sort of wondering like, okay, I short the market, like this is the outcome. Like, I don't know that this disproves anything, from my perspective.
Okay. So, the first question that I would have is like, okay, when you look at the time weighting of when were those tokens launched, right? The majority of our investments, if you look at just like the raw number of them, most of them happened in basically 2021 or like 2020 going into 2022, which basically means that you're indexing a bunch of tokens that launched in the bull market. Obviously, that's going to be where tokens tend to cluster their launches, because tokens, they tend to time their launches around when the market is good, and they tend to TGE less frequently, or they tend to push back the TGEs when markets are bad. So there's a natural pro-cyclicality to token launches. And everybody kind of understands that. That's why you see, tokens, not wanting to come out or wanting to delay their TGEs until when the market is strong. And so you naturally have this counter-cyclicality when you're looking back at like, okay, what happened in the 21 vintage? What happened in the 2020 vintage? What happened in the 22 vintage? So that is going to naturally bias any random subset of tokens. If you just look at anything that launched in that period of time, they're going to be down regardless of whether or not they were Dragonfly portfolio companies. Now, I would hope that the tokens that are in our portfolio outperform the median token on Binance. I haven't checked that. Maybe it's not true. Who knows? But it's obviously true that the tokens that are invested in by high quality VCs are going to outperform random tokens that are out there. But yeah. It's generally true. If you did the same thing, you looked at the Sol price, you looked, maybe not Sol, you looked at the ETH price, you looked at, just kind of random, high value alts, they probably had a similar shape, is that they're down a lot from 21, 22, and, maybe they've regained some of their, previous stature, but alts in general are down because that was ZERP when all this stuff was happening and all asset prices go in that direction. The second thing I'll say is that equal weighted indices, generally underperform indices that that basically weight based on market cap, right? So that's why the S&P 500 is not equal weighted, because what you actually want is like, you're going to own more of your winners over time, and as a thing becomes more successful, like crypto is a very momentum driven market. Growth stocks tend to be very momentum driven.
Okay,
and that's.
I have one thing to tell you though. If I made an S&P 500 for crypto market cap, I would have to own Story Protocol at a very non-trivial percentage of my assets. If I use FDB.
It would be a very trivial percentage.
No. But it's non-trivial. I would want it to be zero in any index. To be honest, right? But in fact,
okay, so
I say
I'm not recommending
crypto is
that you
actually
buy
even
an
weirder
S&P 500.
than what you're saying, though, where even market cap weighting is like probably needs to be filtered more, because like there's a lot of stuff where the apparent market cap FDVs are like not what you want in an index.
Well, you definitely don't want to be buying on FDV. That's for certain. Yeah. So anyway, all this is to say, but taking a step back, I take your point that a lot of tokens went down, and that seems the kernel of your point is that a lot of tokens that launched went down. Some of them went up, majority of them went down. Now, why? The question is, why is that? Why did most of the tokens go down? Right? We're at basically a local top with respect to Bitcoin dominance, which is another way. And Bitcoin's not up that much relative to the previous cycle high. It's up 50%, which is maybe relatively modest compared to what you might have imagined would happen if crypto was solely legalized and the U.S. government bought Bitcoin and blah, 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 all these things that we would think would be, wow, Bitcoin must be at 200K at this point. If you'd asked me last year, what will happen if all these things come to pass? A big part of the reason for that is just naturally that, crypto right now is struggling under the weight of very high interest rates. Obviously a very dim macro picture compared to what we were expecting. Even just at the beginning of last year, people thought there'd be 6 rate cuts last year, right? We've massively, crypto is not operating in a vacuum. And so all of this stuff around tokens is naturally going to be more sensitive to what's going on in the broader risk environment than even Bitcoin alone.
Yeah, I think so. I'm going to go ahead and partially critique my own methodology here, but maybe to prove a larger point, which is, let's say again, I buy all these tokens when they launch. The reality is that if I buy AVAX when it launched, right, and it went to what was Avalanche's high last cycle, like $150 or something along those lines?
No, it was 80, 90.
Is that all? Okay. Well, anyways, as a venture in, let's say, put me in the perspective of a venture investor for a second. I'm taking chips off the table there, right? So I think what I'm trying to point out is not so much that you can't have massive winners and that you didn't have massive winners in your portfolio. What I'm trying to point out is that over X amount of time, and again, I'm just assuming I've held this basket until now, over X amount of time, something stood out to me, which is that this notion of being able to invest, at least with regards to Dragonfly's portfolio, and have asymmetric returns on a few coins that can, in theory, carry this evergreen fund that I'm still holding isn't really true in practice. So, I mean, even AVAX from its listing price to now, I think is like a 5x maybe. You guys bought Maker at 500. It's 1,500 now. It's a 3x. There really aren't enough tokens to outperform in the sense that, 9 out of 10 coins go to zero, but there's one, carries the fund, right? And this was sort of the point you were making when you responded to me, like, I know that's not how VC investing works. And you're spot on. But I'm sort of making the point here that I don't see much evidence really that retail can invest at the time where these tokens are liquid and actually have massive, massive winners. Now, let me qualify this with one thing. If I was talking to Kyle Samani right now with his massive bags of Sol and Sol was available to purchase at 63 cents, I'd be having a different conversation. I'd probably be arguing with him about REV again. But,
let's take one step back here, because I think, again, this kind of mischaracterizes the nature of a lot of these token sales. So what you're describing is the point at which the token floats on Binance or Coinbase, right? That's the initial listed price.
When
Most
retail
of these
gets
tokens,
access.
if you go back, no. If you go back to 2018, 2019, right? That vintage, that was when there were lots and lots of crowd sales that were taking place off exchanges, right? So that was when you had, TokenSoft and CoinList and all these platforms where retail could get access to these tokens before they hit the market prices, right?
But were they tokens yet? Were they tokens yet? Were they liquid tokens yet?
Well, obviously they were not liquid, right? They were pre-sales.
Tokens. Exactly.
Right. They were pre-sales. But they were pre-sales that were available to retail investors.
Okay.
And if you look at like the prices in those rounds, so for, when Solana first listed, I don't know what it was. It was like $1, maybe less than $1.
I think it was like
when AVAX first listed. Yeah, maybe 60 cents. When AVAX first listed, I actually don't know what the initial price was. Sounds like but it must have been, $1, $2, something like that. The pre-sale price was 50 cents. And, same thing with Near, with a lot of these tokens. It's the same story, which is that actually no, retail at that time did get access to these tokens at a much lower price. Now, again, this is before the Gensler regime. This is before a lot of the pushback on, okay, tokens, pre-sales, the American law, blah, blah, blah. And so people had much higher risk appetite at that time. And then, of course, there were ICOs, and many of the projects that are in the top 20 did ICO. And again, the tokens weren't liquid at the time that retail participated.
Let me ask you, like CoinList, and I really am not trying to be pedantic here, but CoinList requires you technically to be an accredited investor. Is that correct?
Not for all of their sales. Some of their sales they allow to non-accredited investors.
Okay. All right. All right. Go on. Sorry. Or you finished with what you were saying.
I mean, so the point that I'm making is that a lot of what you are pointing out there is basically indexed on the 21-22 cycle, which you're absolutely right. If you bought tokens in 21-22, you're probably down.
Well, it sounds like I'm winning this debate.
but that's the fundamental question, right? Like, we're answering a question about a going forward basis. Anytime a token launches, right? Who prices the token? Because what you're describing is relative to where it was initially priced on the day that it launched. Did it go up or did it go down? Right? Now, what you're asking is not a question about what's the fundamental valuation of this token. What you're asking is what is the delta between where it's eventually priced and where it began being priced? Now, the question is, who decided that initial price? Okay. The answer is usually either one, an exchange, right, or a combination between the exchange and the issuer decide on the initial price, or two, the market decides, right? Because especially in 21-22, a lot of these initial price discoveries were happening through IDOs or auctions or all these other mechanisms that people were doing at that time. So the reality is that if the market believes your value is X, right? And let's say this is 2021, and so it's ZERP, and there's a crazy crypto NFT bubble going on. If everyone believes your value is X, even if you list at X divided by 2, the market will pull you up to X within 10 minutes, right? That's what we call these snipers now. But this is not, sniping is that's just people pricing assets correctly. So that will happen. You are just leaking money to somebody if you try to price at X divided by 2. Like the issuers don't control the price. Now, you have market making agreements, and you can tell those market makers, look, I want you to try to keep tight liquidity over here. But at the end of the day, if the market really believes you're worth X, they will pull you up to X if there's sufficient demand and liquidity. So long story short, what you're describing is not some cabal of VCs or founders deciding we are going to price this thing at X instead of X divided by 2 in order to fuck the market, right? Really what was happening was that's where markets were clearing in 2021. Now, markets change their mind. A lot of things get reevaluated. You can see, even in the stock market, the valuations for a lot of tech companies it's going to take a long time for them to hit the high watermark they hit in 2021, 2022. Right? If you look at something like PayPal, you look at something like Zoom, these companies might never go back to the valuations that they had at that period of time. The same thing is true in crypto. There's a lot of assets that quite plausibly they will never, even if they're still alive and strong chains or applications, they'll never hit the high watermark in 2021. That's okay. If you evaluate these things on will they ever get back to that price, what are you going to say to that retail investor? How can you justify the evil you have done? It's like, okay, well, would you say that to CEO of PayPal? Like, assets go up, assets go down because markets change. They change their views. That does not invalidate the concept of what this person is building, because obviously it's still valued by the people who still hold the token. Every time there's a sale of, let's say, XYZ token, launched at 2 billion FTV. Now it's at 400 million FTV, right? You can say to that founder, look, how dare you look in the eye to the retail investor who bought you at 2 billion? What have you done to them? What a disgrace, blah, blah, blah. At the same time, every single point along that chart, somebody was selling and somebody else was buying. Somebody bought that token at 500 million. Someone bought that token at 400 million, which means, again, like that's how markets fundamentally work. There's not this like drip of tokens that are being dumped into the ether by these evil founders. And most of these cases, especially when tokens are doing very poorly, for the median token that's backed by just rando VCs or that's just, I don't know, whatever, some Binance Smart Chain cabal. Yeah. Okay. Maybe the founders are dumping their tokens on retail. In most of these cases, look, I know these founders. I work with these founders. These founders are not liquid. They didn't sell their tokens. They know that they'd be crucified if they did. The liquidity isn't even there for the team supply to be absorbed. So the reality is that most people who lost money in these cases, most people who sold these tokens were not the team or the VCs. In most of the cases where the token is down 80%, people who sold their tokens were the people who initially bought their tokens. That's who sold.
So I think one question which pops up listening to both of you for the last, both now and before, is I fundamentally think you guys are really disagreeing on what the correct notion of benchmark is. There's an absolutist notion of benchmark, which is like Bitcoin or nothing, right? Like every performance that has anything to do with crypto should be only measured against Bitcoin forever. Then there's sort of the relativist version of the world, which is like, well, if we're comparing VC dollars, we should be comparing VC dollars and sort of like VC to VC or VC to index or VC to, ... And I sort of get the feeling that, yes, there is obviously not like a great market, although arguably that's true for VC at large, not just in crypto right now. I mean, I would argue that this is an overall phenomena. But I guess like my question for both of you is like, what do you think a fair benchmark is for VC, right? Like, I think you kind of been beating around the bush on like what the real benchmark should be. And I think that's where I think maybe common ground is why don't we agree on a benchmark first?
Well, I'm not really sure like that's exactly the angle I'm coming from here. Like in fact, to the extent that Bitcoin should be the primary benchmark for this industry, I'm inclined to sort of veer away from this on the grounds that I don't really care to get into, exposing my biases or dogma about Bitcoin. Like I don't really care that much to benchmark Dragonfly's portfolio to Bitcoin. I also understand fundamentally how Dragonfly works. Like I understand how venture capital works. They are taking bets on Monad at, I don't know, 50 million, right? And Monad raised recently at 3 billion. Like this is not lost upon me, to be clear. So I'm a little bit more inclined. I mean, the reason I sort of brought up that like hypothetical portfolio was to show this benchmarked to US dollars. Like I used dollars as the denominator here. And I was trying to show like, okay, let's put Bitcoin aside, right? Like Bitcoin has had a tremendous run up. Most likely, of course, like those coins launched at all different times, but Bitcoin is more than likely, right? Like greatly outperformed dollars in that same time frame. So like, I don't really care to benchmark to Bitcoin. So, I mean, I don't know how you feel, Haseeb. Like, I don't really want to.
What do you think we should be benchmarking to? Because your claim was that VCs are cooked. All these VC funds, I don't see how they're not zeros. Like that's your claim, right? So ultimately, that's a US dollar denominated claim. And to be clear, VC funds don't benchmark to Bitcoin anymore because Bitcoin is no longer a venture asset, right? Like it used to be in 2017, 2018, VCs actually did buy Bitcoin because Bitcoin was not widely accessible. A lot of institutional LPs were unable to buy it, didn't know how to buy it, or just literally it was just, they were structurally incapable of buying it. That's no longer true. Bitcoin is now very, very easy to access through an ETF. It's now also a macro asset, right? It's decoupled more and more from the rest of crypto market caps. That's a lot of what people are talking about, is that how Bitcoin is increasingly decorrelated from the market. So Bitcoin is really its own thing. It's macro asset. It's like aspiring gold with like a, NASDAQ inflection. But everything else in crypto venture, like really what you're buying is something quite different than Bitcoin. Like I own Bitcoin. I recommend our LPs own Bitcoin, but I tell them, look, Dragonfly is not a replacement for your Bitcoin exposure. You should not expect us to necessarily perform the same as Bitcoin because increasingly alts and Bitcoin have untethered from each other performance wise. So the core claim that I want you to extrapolate, and defend is this idea that all VC is going to zero. It's all cooked. This is all vaporware. Like that, give me the strongest version of that.
The charts. I'm literally just looking at the charts of the past 4 years. And then if you want to go back to if you want to go back to DeFi coins, I'm looking at those charts too. And maybe, I don't know how, VC owned those are at this point. I mean, like a lot of the original DeFi stuff is like still, in theory, like very owned by Paradigm. But like, I'm looking at all those coins and I'm saying those coins aren't even within 50% of their all-time highs. Like there is nothing to indicate to me that any of these coins launched are going to reverse. Like that's functionally,
right. So benchmarking at all-time highs is clearly the wrong way to do it. I think we both just agreed about that. What is the right way to do it?
Well, I was benchmarking from launch when I was showing your portfolio. I mean, that was the point, right? Like, let's benchmark from when these hit liquid, the liquid markets. I mean, I think this benchmarking conversation to me is like slightly tangential to like my overarching point, which for what it's worth, like I think I heard you say this recently, and I'm not trying to steer the conversation another way, but like I think I heard you say this recently, which is like, VCs, good VCs are signal in the sense that, you guys have sifted through a lot of the BS. You guys have found these founders who you think are, high quality and have high quality projects. And what I'm saying, maybe a claim I would make then with the information that I have, again, what I look through, the information that I have is Dragonfly seems to be very, very good at investing in simple agreement for future tokens. It's not clear to me that Dragonfly is signal when it comes to liquid tokens. Like, is that a reasonable claim? Would you say? Like, given what I have in terms of...
So the question is relative to what, right? Relative to the median token?
Relative to US dollars. Yeah, relative to US dollars.
No. I think that's where I'm kind of struggling to measure this. Like, relative to US dollars, sure, everything has a price in US dollars. But I think like if you're thinking on a longer term timescale, you usually need some benchmark that's like, what assets am I really measuring the performance against, right? Like people don't tell me, oh yes, Google did really well as a stock against the US dollar. They tell me Google outperformed the S&P 500, right? Like there is a reason that we use benchmarks because it gives us a notion of, duration of the kind of holding times of these assets. So like you do need a benchmark that can't just be dollars.
Okay, so I mean, for benchmarking against Bitcoin, again, this hypothetical portfolio come up with, if we're benchmarking against Bitcoin, it's like obviously way worse.
Right. So that's really true.
Why do you guys want to go that? Why do you want to go that direction?
Hold on a second.
Haseeb, bail on the Bitcoin.
So first, I just told you that, like, yes, these things have decoupled from Bitcoin increasingly, so that comparing it to Bitcoin, like comparing it to alts or an index of alts, totally makes sense. Comparing it to Ether even potentially makes sense. Comparing it to Bitcoin doesn't make sense. Bitcoin's a macro asset now. Bitcoin, like alts could go way down, Bitcoin could go way up. You could have a reversal of the two. Bitcoin go way down, alts could go way up. Like the reality is that the two are no longer connected in the same way that they used to be because Bitcoin is increasingly an institutional asset. Nothing else in crypto is. Almost everything else in crypto is priced by retail. Bitcoin is priced by institutions. So these two markets are really, really dissimilar at this point. They weren't 4 or 5 years ago. Today, they really are. Now, all that being said, like if you are trying to say that the right way to understand this is, did it lose value in Bitcoin terms, right? If you rewind to a year ago, so early 2024, when the Bitcoin ETF launched, what you saw was that alts rallied like crazy, right? You remember that. You had huge rallies where some alts were actually in spitting distance of their all-time highs that they hit in the 2021 cycle. Okay. If we had this conversation a year ago, would you have said, no, a little bit over a year ago, would you have said, actually, never mind, VC coins are great, it looks like alts are actually doing pretty good in dollar terms, so I guess VCs are not cooked. If we had rewound a year ago, would you have made a different argument because the US dollar benchmark looked different than it does today?
I mean, no, probably not. Like, I think that
okay, so then it's not a US dollar price thing. So what is it?
What I'm honestly a bit confused about like the direction of this. Like, I genuinely don't fully comprehend. Like I'm just simply making a point, and I don't know why you want to take it in the direction of Bitcoin. Like you said, it shouldn't be benchmarked against that. So I don't know.
I mean, well, it sounds like you're pulling it back towards Bitcoin as being the comp.
No, I'm not. No, I'm not.
If in dollar terms, okay, fine. So let's put Bitcoin aside. If in dollar terms, right? Like a year ago, alts were significantly higher than they are today, right? Now remember, a year ago also the macro picture was very different. And a year ago, people thought that there would be a lot more rate cuts happening last year. And that was a big part of the reason why you saw a lot of demand for alts. Okay. But let's rewind to that picture. Okay. Near was sitting at $8. Avalanche was sitting at, what was it, 40 something. All these assets were significantly closer to their all-time highs. Solana was over $200. In that world, if we've gone back to that snapshot, would you have still said the same argument that you're making now?
I don't know. I need to think about that because I don't really understand entirely. Like, again, I started from a portfolio of your tokens when you told me short the market, and I'm just holding those as an evergreen fund, right? I'm never selling. I'm investing with the intention to never sell, and I'm now holding them to now. And like, I'm just, I'm not really like, I don't feel confident in what I would have thought back then, apart from historically these coins pump and then they just go down, and sometimes they come back up a little bit, but they almost never make all-time highs in Bitcoin, and very, very few even make new all-time highs in US dollars after their first run up, right?
Right. So like, you say after their first run up, right? Like, there's only one cycle that you're referring to, which is the 21 cycle. Like you're saying this as though there's multiple run ups. There was one run up, which was 2021.
What about ICOs?
What assets did you benchmark that ran up in the ICO boom?
I mean, what are still around? Like, Aave was, right? Wasn't that an ICO? Maker was an ICO, right?
Dude, all of those were like late compared. Ironically, the only one you could really benchmark the whole thing against fully is like the worst fucking asset ever. Sorry, I'm going to get pilloried on Twitter for a second, which is Gnosis. That was the first ICO. It was like it was like
most
late.
Most of these assets did not exist.
Yeah. I think that's the real
vast
problem.
Majority of what you're describing was created in 2019 or 2020. And so the only high that it hit is the 21 cycle, right? Like I just said, the same thing is true in the stock market. This is not a crypto thing. This is just a risk asset thing. Risk assets went crazy in ZERP, right? So if you're looking at any chart of anything and you say, this never hit the high watermark. If I bought this thing, it's down only from the top. Yeah. If you look at an index of stuff that launched in 21, yes, that's what it's going to look like. Everybody understands that.
Would you take your portfolio of liquid tokens right now, 5-year time frame, against Bitcoin?
A 5-year time frame against Bitcoin. I don't know. That's really hard. I don't think people have conviction in these things coming back up. Like, I don't know if this is like a diversion from the original question. I mean, So first of all, nothing has to hit an all-time high in order to be a good investment, right? Like, if you ask the question on the face value, if something is down 80% and it goes up 3x, it still hasn't gotten back to all-time highs, right?
Yeah.
Yes.
That's okay.
Fine. For Bitcoin to go up 3x is really, really hard, right? It requires an enormous influx of capital because it's just already so big, right? It's already a multi-trillion dollar asset. So for a multi-trillion dollar asset to become a $6 trillion asset, that's really fucking hard. It takes a lot of capital for it to do that. It doesn't take a lot of capital for an alt to go up 3-4x if it's worth, whatever. If it's got a 50 million, 100 million circulating market cap, right? So the point that I'm making is that that's the reason why it's not an easy question, because a lot of what you're asking about is fundamentally about what's going to happen to risk assets over the next 3 to 4 years. If you think there's going to be a lot of liquidity injection, if you think inflation is going to be persistent and high, then maybe you actually think that risk assets are going to do even better than macro assets. And of course, liquidity flows downstream. You saw that in 2021, which is that you saw very, very elevated valuations, and the elevation was highest in the things that were lower down the list, right? Like Bitcoin didn't inflate nearly as much as alts did. And that's a natural effect of this kind of liquidity injection, is that things that already don't have that much liquidity, it's easier for you to move their prices.
Yeah. I mean, I think that...
No, taking a step back though, I don't want to make this a macro debate because that is kind of a waste of our time. And I don't think our audience really cares about what we think about what will happen in macro over the next 4 years, right? Here, let me bring it back to this more core point, because the indictment you're making is not just, okay, I think token prices did badly over the last couple of years. Everybody knows that. That's obviously not a controversial position to take. The point that you're making is a forward-looking one. It's not a backwards-looking one, right? You made the claim that VC investments are going to zero. So here's maybe a different question. Do you think that VCs should not be investing in crypto?
Yeah. Okay. This is more interesting. So let's go back for a second, and this will give a better maybe overview of my sort of thesis and why I am, why I make comments about tokens the way I do. So I go back to the ICO era. Okay. And I'm not going to sit here and defend ICOs, and like, I have no, stronger feelings about the, equity or, fairness of ICOs versus VC invest. I really I couldn't care less about this, but ICOs were intuitive the premise was intuitive. You want to launch some project. No. Right. You want to launch a project. Okay.
Mm-hmm.
You need to crowdfund it. You crowdsource, you get people in because you need initial bootstrapping capital for these projects. All right. Now, all of these failed. It was and they were ripe for fraud. Again, not defending ICOs at all, but the idea itself made sense. All right. You're going to launch a business. You can crowdfund it now. ICOs were shut down. We have VCs step in, right? VCs now are investing in businesses, ostensibly, that in the future they think will capture a tremendous amount of value. They are taking the risk early on, right?
Mm-hmm.
My argument is that VCs completely nullify the need for this bootstrapping, all right? You no longer need to bootstrap. You are the bootstrapper. You are the one investing initial capital into this. So then what happens? Well, we have lawyers and legal teams telling founders for the past 8 years, you cannot put anything in writing that ascribes value to this token. Okay. You cannot let these tokens resemble securities in any capacity. My claim, which I still find to be under discussed in this industry, is, okay, why are you launching tokens? If you cannot give these tokens value, why are you launching them?
Okay. So I think it's pretty clear that everybody understands that despite the sort of speaking out of your mouth and the wink wink stuff, is that obviously tokens do have value. If a token literally has no claim on any value whatsoever, it doesn't get valued by the market. Now, for most of these tokens, so the common refrain is that, well, these governance tokens are worthless because they don't have any right to cash flows, right? I think this is an obvious error of analysis. So look at something like Aave, okay? Aave, for a very, very, very long time, had no quote-unquote economics. It was just a useless governance token, okay? Aave, one day, relatively recently, decided that they were going to add fees. And so now the Aave token generates a fee stream. Okay, so it went from being a worthless governance token in the common parlance to now being a valuable, whatever, if you want to call it security-like asset. Okay, now it's a security-like asset. So the question is, what is the delta in valuation when a token goes from not having a fee stream to now having a fee stream? In your estimation, it should be basically infinite because it was worth zero before, and now it's worth whatever the forward-looking value of future cash flows or whatever, blah blah blah. Right? That's okay. That's some positive value. This thing clearly zero. Right? That's not what happened. What happened, and you see it reliably when tokens turn on a fee stream, is that the token goes up like 15 to 20%. That's what happens when you turn on a fee switch. Tokens go up 15 to 20% almost every single time, which tells you the market is not fucking stupid. The market understands that this thing can be turned on. When it gets turned on, usually markets like it. But that the idea, the fiction that, well, it doesn't have a fee stream right now, so clearly it's valueless, is nonsensical. Okay. For any of these assets, if they are genuine governance tokens, then what that means is that you have the right, or governance token holders have the right en masse to be able to turn on the fee stream. All right. It's no different than a startup. If a startup goes public, right, and it's trading now on the NASDAQ, this company doesn't pay dividends. It doesn't do buybacks, right? Almost always when these companies first go public, there are no dividends, there's no buybacks. There's no way to distribute value to shareholders. Does that mean that the asset is worthless? Obviously not. The asset has the right, shareholders have the right to vote to make the company return dividends and or do buybacks, right? And people understand that even if you're not exercising that right, that implicit right that is always there in a governance token gives you the ability to eventually turn it on and capture the fees. Now, most of the time, what people care about in a growing market, in a vibrant technology, is to just grow first. I don't really care about the fee stream right now. I care about the fee stream in the future. And so get big, grow, gobble up market share, go beat MakerDAO, go beat all these other guys, go beat Morpho, right? What people wanted from Aave was not generate a fee stream today and return capital back to token holders. It's go become the biggest lending market out there. Now, Aave accomplished that. They became the biggest lending market out there. And then people said, great, now give us fees. This is exactly what happens in normal companies. So the idea that there's this big disanalogy between what happens in normal securities and what happens with governance tokens, I think is just obviously wrong if you look over the entire lifespan of how these tokens evolve. Now, most tokens never turn on a fee stream. In the same way, most companies never issue a dividend. Most companies die. Most companies fail. Most companies never become profitable. That's normal. That's what happens in startups. 80% of startups go to zero. That's normal. So when people say they're like, oh, okay, look at the median token is failing to generate any revenue. Of course they are, right? Your initial point was that, investing was democratized. Everybody could get access to this stuff. Okay, well, that's what it means to get access to early stage companies, that you get the same distribution that we get, which is that most companies fail.
Well, that's not
on
true.
The stock market,
we don't get the same prices that you get.
No. What I'm saying is that when you're investing at the point of a company or a token listing on Binance, right, it's still basically a 3-year-old project, right? What is the base rate of 3-year-old projects becoming successful and actually becoming profitable to the point where they can actually return value to shareholders or token holders or whatever? The answer, the base rate is very low. Whether you're in the stock market, whether you're in crypto, the answer is the same.
Yeah. And so, I mean, I would just take I would honestly question why these companies need to be liquid at all. I mean, I know that is like heresy in the crypto land, but like, to me, I take just a view from traditional business and traditional finance. Like, Uber did not, well, I guess I'm talking about sort of incentives here, but like Uber did not need to give away equity to their early drivers. They didn't need to give away equity to their early users. They gave away, discounts. They kept fares relatively low.
That's money, right? They were losing money on every ride. That's a subsidy. That's paying cash. Instead of paying in equity, they paid in cash.
Yeah. I mean, I think that the reason, generally speaking, that early stage crypto companies are willing to give away a lot of equity is because they don't really view it as equity. And I think, now this is project dependent.
Why do you say that? Why do you say that?
Because I look at Uniswap. I look at the biggest DEX, formerly the biggest DEX, and I look what's going on with the Uni token. And I know this isn't one of your investments, but like, there is no clearer example of how this distorts incentives in Uniswap.
I agree with you. I've been very critical of the Uniswap kind of, labs versus foundation distinction thing of like monetizing labs. I think Uniswap is basically the only example of this in the industry. And for Uniswap, the token is worth more than the equity. Still, even today, the token is worth more than the equity.
Which is, just like a market dislocation, because the token has a claim on some L2 sequencer fees every so often. To be clear, the token, the amount of trading volume that Uniswap does is roughly equivalent to the amount of spot volume that Coinbase does. So it's a very significant trading venue. Now, it's not monetized at the moment. And obviously, if Uni holders band together, they can monetize it. And I think now in this SEC environment, the reasons to avoid doing that have lessened now that the SEC case has been dropped. But remember, that happened like 10 minutes ago. That was literally in the last month that took place. So the facts on the ground have very recently changed on this point, which may change that calculus for Uni token in particular. I just look at most of these tokens and I think, like, if these are indeed claims on the cash flows of these businesses, and they are very valuable businesses, they shouldn't have all gone down. So like there's something to me, like the charts shouldn't have all gone down. Like there's something to me when I look at these tokens and how, again, you're going to push back on this all-time high thing, but like why are all of these token charts straight down? Like there's like a logical disconnect. And I think that arguing that these things have always been equities, like, yeah, it's like this hush hush thing, but if they've always been equities, it's a little bit roundabout to me. I mean, I wouldn't say that about all tokens. Like, I think a lot of people in certain scenarios did view them as truly like valueless governance tokens. And largely that's why I see the market pricing them that way. But people were selling
if they're
them.
valueless governance tokens, they should be at zero. When someone is selling a token, someone else is buying it.
There's
like
all
that
sorts
is how
of
that
ways.
works. That's how that works.
Haseeb, there's all sorts of ways you can keep the float. You can talk to market makers. You can keep the supply low.
So who's buying it? There's no conspiracy here. When someone sells a token, someone else buys it. That's the only way that could possibly work. So the question is, if you're right, these tokens should not be down-only charts. They should be zero. There should be no bid anywhere for these tokens, right? So why do these things have like a billion? So right now, Uniswap has a $5 billion FTV. Okay. Your claim is that it's a valueless governance token. Okay.
What?
Okay. Yeah. It's down a lot from the high. It's still worth $5 billion. Okay.
What is Story worth?
That demands explanation. Look, I don't know anything about fucking Story protocol. I'm not going to defend it.
Why is Story worth more than $0? Tarun, do you want to interject at all here? Why is Story worth more than $0?
Honestly,
to be clear, this is not
to
my
me
fight.
feels
it's the point. The point you're making is these should all be zero, and I'm saying they're all trending to zero, and you're saying no, they should be literal zero. And so I'm saying,
to be clear,
why is
they are not all trending to zero? Look at AVAX. Okay, AVAX is not trending toward its initial launch price, much less trending towards zero. All right, AVAX was one of the tokens that you listed in your, for the alphabetically going through our tokens. All right, AVAX is worth like 10 billion plus. Now it's down a lot from the high, but that is not what trending to zero looks like. Trending to zero does not mean you stop at 10 billion. You hang around there for the next 5 years.
There's all sorts of ways to keep these things not.
Tell me the ways. Tell me the ways. Explain to me the ways to maintain a $10 billion market cap. Okay, do you think Avalanche is a low float?
I mean, I think it's probably like mainly circulating now, right? Polygon's low float. Polygon is a token you invest in at what?
You think Polygon is a low float token?
I mean, what is the float of Polygon right now?
Okay, well, first of all, I don't think we should be doing this on a one-by-one basis, but Polygon is not a low float token. Like things that launched in the last year are low float tokens.
Polygon is actually kind of weird because technically they ICO'd or IDO'd. Remember when Binance
also,
did the...
There's been all this drama about Polygon, about them potentially having to mint new tokens because there's too many tokens out there. So Polygon is the worst possible example you could come up with. Like most of these token supplies are almost entirely circulating or like 60% plus circulating.
I mean, AVAX is, do you think the AVAX chart looks good? Like, honestly, do you think that chart looks good? Is that a good chart to you?
If you benchmark it to 2021, no chart looks good besides Bitcoin if you benchmark to 2021, right? Okay. But if you benchmark to when it launched, yeah, it does look good.
I mean, what does trending to zero look like? Out of curiosity, and I'm asking genuinely, like, what's a coin that's trending to zero?
Go look at food coins. Okay, those are like fly by night things that launched in DeFi summer. That's what it looks like when something actually goes to zero. There's a lot of things that went to zero, right? People that launched NFT tokenization projects, those went to zero, right? Those are places where there's actually no bid, there's actually no demand, nobody, like basically the market disappeared. Okay. That's what it looks like when something goes to zero. I've seen it many times. We've made a lot of investments that literally went to zero. Okay. These are not things that went to zero. They just went down from the high.
The Gwart Show is sponsored by Ellipsis Labs, who I've been following for 3 years now. They're one of the strongest teams I know in crypto. Ellipsis Labs is a small engineering team with a flat structure. They build complex systems, primarily in Rust. For engineers who like challenges, here's the kind of problem they solve. A layer 2 blockchain needs to maintain 100 million accounts and generate a state root after each transaction batch. The root must be built within 50 milliseconds. How would you design a system to ensure the root construction is fast enough? High-performance challenges are core to Ellipsis Labs' mission as they build modern crypto finance. They believe finance needs more than an upgrade. It needs a complete rewrite. The success of their first product, Phoenix V1, speaks for itself. doing over $70 billion in organic trading volume. Now, Ellipsis Labs is building Atlas, the blockchain purpose-built for verifiable finance. I know this team personally, and I like them because they're unique in the crypto space. They have a long-term focus, they work in person from their New York City headquarters, and they're here to build products that fundamentally change the world of finance. If you want to learn more about their open roles, go to ellipsislabs.xyz/careers. I think it's very hard for me to make I really think my position in this is quite difficult because it's like we're living in parallel realities. I'm looking at the AVAX chart and I'm saying that looks kind of like it's going to zero. And you're saying this doesn't really look like it's going to zero. And the problem is that these things don't really die. They just bleed out. And I have 10 years, 15 years of coins in general to support this. History is on my side in terms of where these trend. So I look at Avalanche. Avalanche is still building blocks, right? It's still a blockchain. People are still processing transactions. People are still trading on there. I'm sure there's some, activity. There's probably a lot of money that they still have to spend on marketing and bringing in applications, but it doesn't look good. And I can only say this anecdotally. And this is why I say it's difficult for me. I look at AVAX and I say this doesn't look like it is a success. You look at AVAX. Also, you got in at a great price. So props for that. But
as do a lot of retail investors.
You look at AVAX. I found the TWAP price of AVAX on Binance was between 450 and 550 over 7 days. Okay. So if you had bought at the instant it listed, but when I used a 7-day TWAP, you're up 5 or 6x, to be clear. Again, holding this from launch until now. So, this is where I find these conversations, I don't have a counterfactual apart from, it's it doesn't look great. And
wait,
I don't
actually, Gwart, I'm kind of curious about the following. Imagine there was a world where tokens did actually go to zero. There was some benchmark that was hey, if token lost 90% of its value, everyone delist it. I'm just saying this hypothetical universe. Snap, it went to zero. There's some threshold. Would you be happier? Do you think the world would be better with an instant zero? Because I do feel there's a sense in which
a little
this
bit
notion of trending to zero versus exactly zero seems to be.
Is this an investor protection thing? Is that
no,
people are getting hurt?
No. It's not that. It's more my view that tokens almost set what I consider to be a lower bound on what, especially early investors, people who got in private rounds, can lose in a sense. So because there is a guarantee of liquidity, because there will certainly be a liquid token. And like you say, there's always going to be a buyer. Somebody's buying, right? Somebody's buying. What it does is, and I'll say something kind of contentious.
I didn't say somebody's buying at a price that you feel good about. There are certainly tokens that have launched that we've lost money on, obviously.
Yeah. Okay. You didn't lose money on AVAX. You aren't going to lose money on Athena, which is one of the kind of breakout apps this cycle, but that coin is down only, right? It's I'm just looking at all of these cheapers, right?
So hidden in here is actually I think which is the point you're getting at, which is you're kind of saying the baseline value of tokens, sort of this anti-prediction market for VCs, where it's the value somehow has to reflect, some sort of floor price, that embedded option that VCs bought, and then the rest is just speculation. So you're claiming the minimum value or terminal value of these things is price of embedded option for the person who bought very early, plus some noise. And you think that should somehow go to zero because the option value went to zero, and the noise, hopefully people stop trading. But I feel empirical data shows that that's just not true. Tokens get decreased, but I feel they don't die, right? It is a little bit and I think that's what you're more angry about. That's what it seems like you're angry about.
I'm not angry about anything.
It seems you want them to die.
I'm not angry.
You want you want the token killer.
So, let me ask this question. What do you own alts?
I go through periods of owning alts and then not owning alts.
Okay.
Yeah, but
okay. Go through periods.
So wait. Are you saying this debate is a form of therapy for your bad alt purchase?
Yeah. Is this coming from some particular experience you've had and losing a lot of money on VC coins?
No.
Because like at the end of the day, like the default response to most markets, because here's what I'm not hearing from you, and what I thought I might hear is that, okay, this is like some kind of cabal. VCs and founders are coordinating in order to, launch tokens high and dump tokens on retail. I'm not hearing that from you. That's like a very common kind of conspiratorial view of what VCs do. It doesn't sound like you think that. It sounds like what you think more is that the market is systematically mispricing these things, and maybe VCs have an unfair advantage and that they're getting in early, but markets are just like irrationally thinking these things are worth anything, and they're wrong, and they're learning it only over time as these markets bleed out. Okay. Is that a good summary of your view?
Well, one point you made with regards to VCs having an unfair advantage, I do agree with that directionally. Like, I do think there is something wrong, and I'm not even blaming VCs here, to be clear.
Wrong
like,
morally or wrong?
No, wait. I'll tell you. Like, it is something wrong about the market structure. And like I was saying, I'm not blaming VCs. I'm not blaming founders or market makers or anybody. Like, if anything, I just view this as sort of a screwy market. But there's something sort of bizarre almost about me, again, naively looking at all of these charts and just seeing them getting wrecked, but also knowing that VCs are still profitable on a lot of these, right? And over the course of 4 years, over the course of their vesting cycle, you guys are still making money. And I'll bring up like a recent investment.
Hold on. This is incompatible with the claim that you made in the tweet. You said in the tweet that VCs are going to lose all their money, that all this stuff is going to zero, and that VCs are cooked, right?
I do think
so how can it also be that VCs are all making money? It can't be both. Either the VCs are making money and these are good investments, or the VCs are losing money and they're also fools.
I think there has been a change. And in fact, you bringing up the Bitcoin decoupling and how it is a different asset altogether, I do think that plays a big role. I think that we haven't had an alt season, like a proper alt season. And my intuition is that people aren't, I say people, I mean, whoever, I'm not trying to sort of appeal to the downtrodden retail investor here. I'm just like, whoever it is in the market, like, I don't think they are buying these tokens in the same swaths that they were prior. So my past view on VCs is that generally they've had somewhat of an unfair advantage, and they're getting in at rounds where it doesn't really matter what happens to the token. And I mean, I think like Avalanche is such a great example here, right? Like, and you can say that retail got in at maybe some favorable prices, but I didn't see like an asymmetric return. Like, I didn't see any coins that were 100x's from Dragonfly's portfolio, for example. I saw a few, 3, 4, 5x's, but I didn't see this notion of, well, retail investors can invest similarly to VCs in the sense that, of course, 9 out of 10 coins go to zero. One has this, carry the fund type return profile. I didn't see that. So my past view of VCs, and I think it's a reasonable point to bring up though, my past view of VCs, there has been somewhat of an unfair advantage. And my going forward view is that the market is generally correcting. And we've also seen this in practice. I mean, we've seen Scroll launch, but was quickly trading at a valuation much lower than its final financing round. There have been a few others recently. So I do think the market is generally correcting. And yeah, I mean, I'm not sure that.
Does that fix the problem?
I don't know. I mean, it's hard to say. I think
it should, right? I mean, what you're describing is that, okay, the problem is that the market is mispricing these things. If the market starts correctly pricing these things, problem solved. Yes or no?
The market could be too slow. The market could be too slow to correct this
stuff. The market should be even more punitive than it is right now. It's insufficiently marking these things down from even where they're launching today.
Yeah, I mean, I just don't think the market progresses fast enough. And like, it's simple. I mean, it's like, if you can print a token out of thin air, I'm being very reductive here, okay? But if you can print a token out of thin air and sell it for more than whatever marketing and development costs there were, like, people will do this until it converges on the marginal cost of production equals the marginal price. But it's not yet.
If this is true, if this is true,
I think the hard part for me, and this is actually sort of something weird about crypto versus like normal assets, is the marginal cost of production for these assets over time actually increases, because like you have to no one wants to market make them, right? Like it's not like they have this thing where like they're very cheap to produce, to keep alive, and then they get very expensive to produce later. And I think that's actually why you have this like, oh, it doesn't go to zero thing. It's like actually no one really wants, especially once they're down enough and they're not large enough market cap wise. You just have this like no man's land where there's like not enough people willing to sell. People like are just stuck on these losses and they're hoping for the lottery ticket. And then you also have market makers who are like, fuck you, I'm not going to market make this. So I think like having
like absurd.
I just think this notion that there is this marginal cost of production thing and we get this like equilibrium in the long run doesn't exist here. But for more of these,
you're being like pedantic, Tarun. You're like really digging into
the core of the point is this, Gwart. If your claim is that there's this magical money making machine called launching tokens, and whatever it is that you launch, the market's always going to systematically misprice it way too high. And VCs and founders are both going to be able to dump on retail and run away like thieves making all this money, then why don't you do it? If you think it's so easy, if you think it's so deterministic and so reliable, then shouldn't you be doing it? If you're so smart, launch a token and like cash in.
Dude, I don't want to do this for like very clear reasons, right? Like,
which is what?
Which is that I find it to be like, I want people to hate me for my incendiary views or being a dickhead on the internet. I don't want people to hate me for launching a token that I always plan to rug. I don't want to launch a token because I don't want to be beholden to people.
But you're convicted nevertheless that if you went out and launched a token, just some vaporware slop, some, AI, blah, 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 whatever, some L1 for AI agents or some shit, you are convinced that you could reliably turn it into $multi-hundred million, launch it on Binance, sell tokens into retail, You think I could totally do that? It'd be super easy.
I mean, I have no idea.
If you wanted to, obviously you don't want to, but it sounds like that's what you're saying.
What do you guys, I'm interested in Tarun's view on this as well. Like, what do you guys make of what movement is doing right now? Like, what, do you guys have any sentiments on, Rushi and the allegations of team selling? Like, what do you think of what's going on right now?
I'm not an investor in movement. Everything that I've read is all just stuff on Twitter, right? So all I've seen is the hearsay of people saying that they're doing this, they're doing that. I will say, if they are doing that, I think it's extremely shady and obviously unacceptable and something that I would never endorse if I saw it. Now, that being said, I want to see receipts to understand, are they actually doing that? Because if they are, then fuck that shit and this industry has no room for it.
Okay, but that what is movement? What did it launch at? Like 10 billion? Idea. Tarun, can you step in here? Aren't you a movement fan?
Tarun is an investor in movement.
I know, and that's why I asked.
I will say two things. The first is I think launching the token before the network made no sense, personally.
Infinite money printer.
That was kind of like I think they would probably tell you agree with that, but I actually don't know. And second is I think there is sort of a unfortunate thing where like the first time people meet Asian whales, they get convinced into doing sort of very bad long-term decisions due to someone wanting to get very good entry prices. And I got to say, the cultural difference, I think, about these types of sales between Asia and here is like very palpable, right? Like people in like, you go to Dubai, you go to Asia, everyone is constantly trying to like convince you to launch a token and dump on people. And then you come to the US and everyone's like, I'm a holy saint. Don't talk. How dare you talk about token? And I think certain people may or may not be more or less influenced by that. I that's just my kind of assessment on how this happens. I don't know if that makes sense.
Let me just say this. There's obviously a lot of bad behavior in the crypto industry, and it's true pretty much everywhere. And I do my part to try to be a bulwark against that kind of bad behavior, and I don't tolerate within our portfolio companies. That being said, I don't see my task here as defending every fucking token that's out there, because obviously I didn't invest in them and I don't endorse them. Okay.
Yeah.
Like, this debate is about VC as a category, as a concept.
Right.
And your indictment was not of movement. It was not if you just indicted movement, I'd be like, okay, fine. Or story protocol, I'd be like, yeah, sure, whatever. But your claim is that all VC investments are going to zero.
I mean, okay, I'm being a bit hyperbolic, right? In the same way that you telling me to short the market is being hyperbolic when I go and short your portfolio and I have fantastic returns. Okay, like let's agree that
do it now. Go do it now. I mean, look, I
wouldn't
very
even take
much
your
welcome
portfolio against Bitcoin. You wouldn't take your portfolio against Bitcoin. Your liquid portfolio
against Bitcoin. I own Bitcoin and I own my portfolio. Like I own both.
But you won't take the other side of it versus Bitcoin. Like,
are you asking me would I literally sell all my Bitcoin just to prove a point? No, I wouldn't do that. I own Bitcoin.
No, I'm
bullish
saying,
Bitcoin as well as bullish my portfolio.
Would you take a basket of all the liquid tokens against Bitcoin for 5 years? And you said, let me think about that. Like,
yes, I literally told you I'm not sure because I own both.
Yeah. Okay. So that's fine. But I guess my point with that is
okay. Actually, I think a better question, because like if we just take the assumption Bitcoin is just a different asset, would you take your portfolio over ETH? Would you take your portfolio over Sol? Those are the two questions.
I may take Dragonfly's portfolio over ETH for.
Okay,
and I hate Dragonfly's portfolio.
I would take my portfolio over ETH.
There you go. Okay, that's one. Yeah. What about Sol?
I mean, I own a lot of Sol, so it's I mean, do I think our portfolio outperforms Sol? Sorry.
I mean, I don't know. Like, what is the relevance to all the tokens you own in your own private portfolio? Like,
well, because I express a bet that I'm bullish on all these things simultaneously, right? So you asking me like, oh, well, am I more bullish on the S&P or am I more bullish on the Nikkei? It's like, I don't know. I own both of them. I don't really have a view. Right. I said yes to both.
Okay. That's fine. Let me come back to something though. Let me come back to one point here.
Okay.
You said, if it's an infinite money printer, do you think, like, why aren't you doing it? Like, if you're so smart, why don't you go do it? I will tell you, like, I brought up the movement thing, and you're not an investor, but I brought up the movement thing because, like, my thinking here, I don't know. Again, I haven't tested this, and I haven't even taken steps to test this, so I haven't like felt it out, right? But my intuition is like, all right, Rushi can launch at, I don't know what it was, let's say 5 billion. Like, I think I could launch something at 50 million. Like, so maybe it's much less, but when you say like some infinite money printer off like whatever, shitty internet clout that I have, yeah, I do think I could probably get a VC to like, invest in. I could probably make a lot of money doing that. I don't know that for a fact, but I just wanted to say, like, to your point,
okay, that's significantly reduced confidence from what I thought you were going to say.
I mean, your claim
is that I could launch a shitter at 50 million and maybe exit possibly.
Okay, actually, Gwart, I have a question for you. Which do you think has a terminal better portfolio value on a 5-year time horizon if you suddenly dropped everything you're doing and you went 100% to doing this? Number one, launching a high FDV token. Number two, becoming a VC. Like, imagine you tomorrow had to, you had the two-armed choice of you becoming a VC or you launching a token. Which one do you think you have the higher terminal value for yourself?
Like as a percentage return or as like the actual nominal amount?
Percent. Let's just say.
I don't know. I mean, I don't consider myself like some, uniquely assiduous VC investor here. Like, I don't claim to have like some.
No. But the reason I'm bringing this up is like, I think you kind of have to ground these comparisons somewhere, right? Which is like, okay, we're asking Haseeb the question of his VC portfolio versus some liquid asset. But the dual of that is like, where would you think, the kind of VC performance is relative to the actual token performance? Because one of, I think, the things here is that's being claimed is like, hey, the insiders are just exiting a ton. And like, don't get me wrong, there's tons of examples where that happens and it's not great. But on the other hand, suppose you were just like feckless, had no kind of
well, look, to be clear, if you commit fraud, yeah, you can make a lot of money. That's why fraud's illegal.
No.
But like, what is fraud now? What is fraud now? Is me launching a pump.fun shitter and, like doing everything in my... Yeah, is that fraud?
Yeah, that's fraud. Yes, that's fraud.
You think so?
Yes.
I mean,
that guy, who's the...
Kelsier guy?
Libra guy? Kelsier Ventures guy. He's like wanted by Interpol now.
Yeah. What level of fraud do you think you have to commit to, like, for them? I mean, this is a bit adjacent to the, like,
I mean, look, this is like a legal realism thing, which is reality. Random people who are running random little shitcoins.
What about
nobody cares? But if you do it at enough scale, yes, you will get indicted for fraud.
But define rug in this context. Like, all these Zora coins are people who are, pumping their little Zora coins on base now and selling 80% once it hits $5,000. Is that a rug? Is that fraud?
I mean, it's only fraud if you make a representation that you later, that you basically lie about something related to a business that can cause someone to lose money. That's fraud.
I'm just waiting for the pimping and squirting joke.
Okay, we're not. Okay.
No, I mean,
Gwart had some bangers from the.
I believe it. I believe it. Okay, let's try to reorient back to as much as I can to the core of the question, which again is about VC investment. Okay. Your claim is that, okay. So to be clear, if VC investments are going to zero, right, as you claimed, that VCs are not going to make money, do you think it is that VCs are fools, or do you think that VCs are fraudsters, right? Because those are two very different worlds. In my mind, if your claim is that VCs are fools, like, your claim is more compatible that VCs are fools, that they don't understand the mistakes that they're making, and that's why they're going to go to zero. Nobody would willfully invest in a portfolio that's going to zero, right? So they must be fools. On the other hand, many people claim that VCs are fraudsters, which is that VCs are making a ton of money. They have insane IRR. They're constantly dumping on retail, and they know that these things are going to zero. It sounds like you think actually that VCs are fools, not fraudsters.
I think that's closer to my view. It's closer to my view in terms of the current environment, right? Like, going forward, that is closer to my view. Like, so you think
both VCs and retail are fools?
People who are buying these tokens, I think, are fools, yes.
Okay, so alts in general, bad, going to zero. These are all just, way less valuable than they appear to be by the market.
Yeah, I mean, I would agree with that, yes.
Okay, so it sounds like the core of your point really isn't so much about VCs. It's really just about alts, right? So VCs are part of the supply chain of how an alt gets created. But really, if all alts are bad and all the retail buying these things are stupid because all these things are valueless, your quibble is not really with VCs. What do VCs have to do with it?
Well, I still think that despite these tokens,
because the VCs aren't even profiting in your model, right? In your model, the VCs are also losing money. Everyone's losing money.
Yeah, I mean, I again, it was a sweeping, hyperbolic initial tweet, and I do not expect returns on these tokens to be anything like the 2020, 2021 funds returns on tokens. And I don't see...
Wait. The 2021 funds was horrible. It's the 2018, 2019 funds are the ones you're thinking.
Okay, yeah, those funds, yeah. Like, I don't think this model works the same going forward. With this said, there is the other side of this. And this is why I brought this up last episode, which is, it literally does not matter to you if Monad launches at $10 billion and over the course of 4 years ends up trading at $750 million. You are in profit. It is anything.
But why would that not matter to me? Obviously, I would want it to be worth more.
Because you invested at a valuation where it does not matter if it goes down.
Expected value is not binary. My expected value is not binary. I don't just say, oh, this is above where I invested, so great. I'm uniformly positive about this thing. I want it to be worth more because Monad's a big winner, and I want it to be worth 5 billion, 10 billion, 20 billion.
Right. But you are still going to be profitable regardless.
Yes, but I have a linear expected value. Like, it's just not true that I'm equally as happy if it's at 750 million as if it's at 5 billion. Obviously, that's not true.
Okay, so here's...
by the way, I not to be pedantic, but it's not really linear in a staking chain. And also,
fine.
You might have...
Modulo staking. Okay, whatever. Yes, fine.
Yeah. Just to be clear. That's all.
And this goes back to my very initial point in this entire conversation was that the edge in Monad for you was being early. It was not necessarily identifying a good long-term investment, because when the token is liquid, at that point, it can go down, and it was perpetually. It can just go down, and over the course of 4 years, you will still make money. Do you agree with this?
If it doesn't go down that much, then yes. But as you also agreed, venture returns are power law distributed, which means that most of our returns come from a small number of investments, right? If those small number of investments don't return that well, if you don't get a 50x, an 80x, 100x, and instead you get a 5x, then all of a sudden a fund that looks really good looks really bad. A single investment can turn your entire portfolio. So for me, I really care that Monad does not become worth 750 million. So that's just not true that I'm like, oh, great, that's fine. I made a profit. Sorry, go ahead.
No. I'm putting this in the context of like the difference when you tell me short the market. Okay. When you tell me there is not an asymmetric return for me if Monad goes from 10 billion to 1 billion. There can still be an asymmetric return for you if Monad after 4 years is trading at 1 billion. This is the core of my point.
Particularly asymmetric if Monad ends up trading at 1 billion. But look, okay. I get your point. Your point is that yes, I would still be in profit because I did the seed round. Okay.
Yes.
Obviously, yes.
But but there's duration risk, right? Like I think like somehow like the liquid investors never really don't have any real duration risk, right? They can leave whenever they want. So I agree with you though that the market in private markets doesn't adjust duration risk relative to the assets fast enough, right? Like think about the lockup schedule stuff. It's always slightly after a bull market starts that everyone starts being like lockups are 6 months or 1 year or whatever. Like if they start shrinking. And then the moment there's a bear market, people are like, oh, can I keep extending my lockup? Can I keep extending my lockup? You know, the number of times you get these companies that are like, it's already been 3 years and they're like, actually, we're going to lock you up for another 2 or 3 years, right? Like, so I would say like there's a lot of duration
is
risk.
Also a further, is also like against Gwart's point here, which is that when projects do that, when they say, hey, let's relock, the reason why they're doing that is because they know that there's no liquidity for this token. We're not going to be able to sell. The insiders are not going to be able to get out. The VCs are not going to be able to get out. And the VCs continue writing it down if that's in fact what happens, right? And of course, as you mentioned, the modal token goes down. The modal startup fails. The average lifespan, even of a public company, is like 20 years, which means that, yeah, those things also go down. Most companies fail. They have a finite period of time through which they generate cash flows, right? The same thing is true of tokens. The same thing is true of everything in the world. The world is fucking entropic. So let me ask you this question. Let me shift a little bit away from tokens. Because obviously it's true that seed round investors are going to make money. If that's the core of your point, yes, regardless. I get that. That's also true. That's also true in the venture market outside of crypto, right? Okay.
Yeah.
So you said in that tweet thread that you don't think this argument pertains to equity investments. Okay. We also make a lot of equity investments in crypto. Why does this argument not pertain to equity investments as well? Coinbase is down from the high. I don't know that Coinbase will ever hit, $80, $90 ever again.
Because my initial point was the tokens are vapor. I'm sure you guys have done quite well in equity investments. Actually, like I said at the beginning, I was actually quite surprised looking through your website how many pure equity plays you guys have made. Like, I think you're probably on the higher end of crypto VCs investing in projects that don't have tokens. That's just not what I was talking about, though. So,
okay, but why is it different? What is different about it?
Again, the guaranteed liquidity of tokens.
We don't have guaranteed liquidity on our tokens, dude. I'm just telling you this. Like, if you went and looked at our portfolio and you saw, okay, how many of these things would you describe as guaranteed liquidity? The answer is a very small portion of them. If a token is not big, then there's no guaranteed liquidity. If you own 5% of a token supply of a token that's trading 10 basis points of its float a day, this thing is not liquid. You can't sell it.
How many, let me just ask a question. How many tokens have you written to literal zero? Like literal zero?
I don't know. A number of them.
And what?
I don't keep count.
Okay, but yeah. So what is the process of that? Like, do you just decide we're gonna hold this forever? Like, is that the idea? When I say right to zero,
either that or we just basically write it down and say, okay, look, this thing is worth so little that it's basically de minimis relative to the fund.
Okay, yeah, I'm just curious because a lot of my.
If your question is, does that ever happen? Yes, of course it does. It's a venture fund.
Yeah,
that's typical in a venture fund. Is that most investments fail.
It's also sort of a line in the sand to tell your LPs, like, yeah, sure, there's a liquid price for this, but you should mark it to zero too, right? Like there's a sense in which it's actually sort of like a bilateral agreement.
To be clear, let's say you make an equity investment, okay? You make an equity investment. The company's not public. There's no exit. Well, there's a potential for a secondary market sale, right? You can go find some buyer, OTC, and try to sell the shares of this company. You could say, look, I'm going to mark this to the last round price. And technically there was a sale at some point, but it's not actually liquid. I can't go and sell 20% ownership in this company because nobody's buying in that quantity, right? So I would just crash the market or I basically get zero if I'm trying to sell this thing at 20% of this supply. There just really is no bid. So the same thing is true in tokens as in equity. Like for a lot of these tokens, it's really like pink sheets, like ostensibly, yes, there's a price. Ostensibly, there's a market, but there is not liquidity. You cannot sell 20% of a token that's trading, on, I don't know, Hotbit or some random, like D-tier exchange. Technically, yeah, it has a token that gives you the illusion that like, oh, this thing is just like anything on Binance. That's not true. So the number of tokens for which a VC is actually able to exit and get liquidity is a small portion. And the answer is it's the winners, which is unsurprising. Again, the same thing in normal venture. In normal venture, you get your liquidity on the companies that have liquidity, obviously.
Yeah. Let me ask you something. Of the projects that you've invested in with tokens, how many of those could you have underwritten? How many of those could you viably have invested in if there was no prospect of a token? I
don't even know what an L1 investment would be if there's no prospect of a token.
Yeah, I think that's reasonable.
What would it even do?
I think that's fair. I've actually had discussions as to whether or not that's possible with some of it. That's a bit of a side note. Okay, let's take the tokens that are not L1 applications, okay? How many of those could you have underwritten if they were never going to have a token?
I'd say before 2025, probably very few of them, because obviously there was no way for a crypto project to go public in the US.
So, but why couldn't they be acquired? Why couldn't they be like?
Who's going to acquire? Under Lena Khan, there's no M&A.
No. There actually have been some examples of this. I remember
Bridge,
in the
right?
No, Bridge is
just a regular company.
Not
Bridge is a fintech company
because they didn't have it. Okay,
but there were some examples. I'm trying to remember exactly what this like shitty L1 was in 2017, where like the team launched this like ICO. They were supposed to build the L1, then they just gave up and got acquired by Brex, like the equity company. And so like and then Brex had to take the tokens and like insta dump them, and you can like see it in the market price of like when the acquisition happened, because like this company that wasn't allowed to hold tokens just like bought this treasury and then had to like completely eviscerate it.
Let's say, okay, I think the best example maybe is a DeFi protocol. Okay, let's say you build a DeFi protocol, generates revenues on chain. You could say, look, I'm not going to have a token. This is just a company. We just make money. I mean, this is basically what Pump.Fun is, right? It's on chain.
Right, exactly. That was what I was going to bring up.
Right. It's got a lot of automated dynamics such that, nobody necessarily needs to be in charge. And it just, puts money into a pot, and the pot is owned by the company, right? You could do this in principle. Now, I think for Pump.Fun, nobody really cares that Pump.Fun runs this thing and basically, operates the casino, right? And that Pump.Fun has total discretion to decide when to change things. And obviously they have a number of things in the core product that have changed, of like, live streaming and moderation and all the stuff that they do. Now for something like Aave or something like Compound or something like Uniswap, I think it's very easy to understand why the core product is actually different if there's a team that has unilateral control over this thing, right? Now, one of the reasons why was that, remember, all this stuff was launching in 2020, 2021 at the heyday of the SEC's assault on crypto. And a lot of the reason why people wanted these projects to actually be owned by token holders and be controlled by token holders was because if you were owned by, Uniswap Labs sitting in Brooklyn, well, they got hit with a fucking SEC and CFTC orders to say, stop doing what you're doing. So the reality is that these products could not continue to exist if they were not owned by token holders, right? Which is the core reason of decentralization in the first place, which is censorship resistance and the ability to operate trustlessly without having to know, did somebody kick down the door of this company and therefore my application is going to get turned off or my deposits are going to be frozen?
I mean, okay. Uniswap, like the Uni token, like we all know, like you conceded, right? That we all kind of understand this is some equity or some claim on cash flows or some
in the
future,
protocol.
Right?
Of the protocol, yes.
Of the protocol. Okay. What do you mean by this? Like, can you own a protocol?
Yes.
you can own a protocol, right? Like,
Yes.
okay.
If you acquired 100% of Uniswap tokens, you would own Uniswap.
But you're not labs, right? You don't
Correct.
have the front end, right?
Correct.
So it's really not like, this is what I'm
protocol.
saying. Like,
that's why I said the protocol, not the front end, not the domain. I said the protocol.
Right. But like, this is sort of my point here is like, I don't think that these tokens.
How much the volume going through Uniswap you think comes through the front end?
I don't know. How much is it? Is it not
like
much?
25, 30%.
Okay. But I mean, on like, again, the equity holders get all of that, right? And the token holders
they get the fees
none.
that are charged at the front end. Yeah, correct.
Yeah. Okay. So, I mean, I think personally, this concept of like owning a protocol is sort of bizarre, to be honest. Like I don't, because what I think has happened in this space is we've like sort of bastardized this terminology.
Hey, I have a question for you. Are you mad when you hear stories of the following, which are Australian investment bank Macquarie owns 40% of the toll roads in Indiana and has a revenue sharing agreement with the government for basically servicing the toll roads? Because honestly, protocol investment is very similar to that.
I mean,
where public infrastructure is sort of like sold privately.
Right. It's extracting, like you build something atop a protocol that extracts from that protocol. Like the protocol is open source software, right? I mean, now with Uniswap, right, they've gone to like this business source license. We're seeing an increasing number of closed source stuff because that's how you build a moat, right?
Yeah, that's not
like
closed source.
What?
I said PSL is not closed source. That's open source with a license.
We're seeing an increasing number of closed source closed source projects like on Solana currently. A lot of the wallets are closed source. Like we're seeing that this is the way that people realize this is how you build a moat. And I think that for especially in this whole public goods funding drivel narrative, like absolute nonsense, what happened was people genuinely believed that you could invest in the, open source software. That's not what you're invested. Uniswap, you're invested in the DAO, which has the ability to turn on the fee switch in the protocol. In theory, right? It's not really happening yet.
It's not just theory. Yeah, it's not just theory. It's in the code.
But okay. But what I'm saying is like this has really, from my perspective, been like the cause of misunderstanding about tokens and why they don't really represent equity, right? Like they just have this bizarre construct where you are owning some piece of the DAO or something, but those people don't act. I mean, those aren't the contributors to the protocol, right? Like that doesn't give you the right to like open, pull requests. Like it's just these people are not actually like true owners of the protocol. They don't push the direction of it.
What would it mean? What would it mean to be true owners of the protocol? What would be different if you were true owners of Uniswap? I
mean, I don't think that we should view it through this. Like, I think that
you said it's not true ownership. What would it mean to be true ownership?
I don't think there's such thing as true ownership.
There's no such thing as true ownership of a protocol.
I will say one thing. Also, sorry, I got to run in a sec. But I basically, open source software has always had this fraught relationship with monetization. For instance, if you were an investor in Docker Inc., 99% of the enterprise value of Docker Inc.'s open source software went to Amazon Web Services and Google. And like, you should have just bought their stock instead, because effectively most of their code was very useful for kind of cloud providers, but then effectively the only people who could monetize it were the people who had distribution. So I do think there's sort of this weird thing that you are getting at, which is like, there is a sense that sometimes people feel like people are double dipping in the cookie jar after, and like, no doubt there is sometimes that there is some truth to that, but I would definitely compare though to the historical open source software failures, and this was just another attempt at trying to figure out a way to make it sustainable and not just like completely captured by like two people. Which has been the history of open source software, which is like a lot of times people will make stuff and then basically they'll just be selling distribution that kind of take over.
I just like don't really like analogies with, past open source software investment. Like Red Hat was building custom integrations for Linux. Like they built services for companies that worked with or on open source protocols, right? Like they were a B2B SaaS company. Now, the same can apply.
But they were really more like
oh, guys,
we're getting
way off track here. Why are we?
I really gotta go. So
all right, we can wrap it here unless you have any other points.
Well, no. Why don't we wrap up between the two of us and just kind of recapitulate for the audience, because I think we're going to end the debate with this being the last piece. So I think it's worth kind of summing up and just kind of describing our own differences. That way, Tarun, you can drop if you need to.
That's good. Thanks.
Thanks, Tarun. You didn't contribute much, but thank you.
I know. Honestly, that's honestly, you guys asked for a moderator, and I'm like, you guys are like a perpetual motion machine. You guys just like can easily go at each other's throats for hours. So like,
we should do this.
You didn't need me. You definitely didn't need me.
All right. See ya, Tarun. Okay. So I think if I can maybe summarize and try to kind of pull the threads together of what we established that we disagree on. Okay. And so let me try to do this. Let me try to steelman your position and you try to steelman my position, and we can try to see if we've actually understood each other's views.
Okay. It's been so long. We've spent so much time on here. I don't even know if I remember. Go ahead. All right.
Let's try our best. Okay. So, I think from Gwart's perspective, his view is that, so first of all, most of these tokens are basically worthless. They argue based on analogy to equity, but they're really nothing at all like equities. They don't really give you a share of cash flows except by very tortured arguments, over, how these things are connected to the underlying protocols. I think he believes that, markets are systematically overpricing all these tokens. And there's just a wellspring of credulity that allows VCs and founders and anybody who gets in early, employees, all that stuff of tokens in particular, to be able to exit to just an infinitely credulous retail audience, and that this is bad, and we should, this is something that maybe the market is slowly figuring out, that, hey, these things are down only and they're not really useful, and all these stories that people tell about the value capture of these things is not really there. But it's a little too slow, and you should get ahead of it by getting out of the way. Now, some of these VCs might make money because they invest so early that, these things can be down only and they'll still be fine. But the whole, kind of token industrial supply chain, is itself kind of a gigantic waste of time and energy because it hasn't really produced anything of value.
Yeah, I think that,
summary?
Maybe you argue for me better than I argue for myself, but yeah, I would agree.
Okay. Now your turn.
Yeah. I mean, I guess your claim is, VCs aren't these, insanely profitable, just constant token generation machines. The market itself is pricing these things, right? Like the notion that VCs have some insider cabal and are constantly manipulating the supply or float or, token dynamics to keep them at some price is absurd. There's oftentimes no liquidity to actually exit. So this idea that, VCs are just full stack Hitlering 20% of the supply of a token in, on some sort of low liquid markets is completely naive. And then I guess the last thing I would say is that we've had this understanding all along that tokens represent, hush hush equity, a claim on the future profitability revenue of these projects. Did I leave out anything?
I think that's most of my view. I guess one last thing that I feel like I didn't fully articulate, is that I think the distinction that you are making between equity and token investments, right? Now, look, you might have the view that everything that's going on outside of Bitcoin is basically worthless. I obviously don't believe that. I believe that what if you look at Ethereum, Solana, Avalanche, all these things, stable coins, DeFi, I think these things are really valuable. They're really important. They're actually what energized me to get into this industry, is that I understand Bitcoin. Obviously, I own it. It's a great macro asset. There's Bitcoin, if it, at its highest aspiration, replaces gold, and that's great. But like, I don't know. I'm not that excited that whether or not it replaces gold. I'll own it. I'll participate in the upside. But to me, that's not that disruptive on a global scale, because we already had something that did that, which was gold. It was just less efficient. To me, what is being created in Ethereum, in Solana, in Avalanche, in Monad, and all these things is something fundamentally more disruptive toward the world. And I think some people see that. Most people maybe don't believe it or don't understand it. And I think that's okay. And it might be wrong. It might be that in 20 years, we're not using any of these L1s and it's really just Bitcoin and everything else is zero. If that happens, I'll be disappointed, but I'll understand that like, hey, all of us in the industry took a risk on something that we knew was a little bit crazy. Now, I don't think that's actually what we're seeing. I think what we're seeing is that these things are being used more and more every year. You see monthly active addresses going up to the right. You see TVL going up into the right. You see stablecoin usage going up into the right. You see DeFi TVLs going up into the right. And obviously these things are curvy because, macro and whatever, there was a crazy frenzy in 21. But almost all of these things, whether it's whether it's Solana or Uniswap or, insert your favorite thing, even Pump.fund, all of these things were funded by venture capitalists. That's why venture capitalists exist, is to help new ideas get created because it costs money to get people out of their jobs, to get them to hire some folks, get a fucking space and just build stuff that requires somebody to take some risk. And maybe it's better in a world where retail investors can also provide that risk capital. I think there are obvious problems with it, which are problems that emerged in the ICO bubble, which is that it's really easy if you're a retail investor to get defrauded. And professional investors, our job is to make sure that we don't get defrauded. Now, some professional investors fail in doing that, obviously, but the good investors, the reason why they're good investors is that they succeed in being able to identify the best founders and to actually help them. That's what I do. That's what I believe I do. I believe what I do is valuable to this industry because I've seen it. I was there when Solana was doing their seed round. I was there when Uniswap was doing their seed round. I saw all these projects get created. So now, do I think it's my do I think I deserve much of the credit? Obviously not. The founders deserve the credit. They're the ones who built the stuff, but they needed money to do it. That's what VCs do. Now, if tokens are overvalued, and the market will fix that. The market's already fixing it. And your voice is a part of how the market fixes it. Because you saying, hey, all this shit is overvalued makes the next marginal buyer say, you know what? Gwart is right. I'm not going to buy these things anymore. And then what happens? What happens is that these tokens launch at lower prices. You're already seeing it. Zora launched at, what was it? 350 million. Initial launched at like 600.
What do you think of Zora? What do you think of the Zora launch?
I have spent zero time on it. I just
they raised like at a $600 million valuation, I think, and they launched a token yesterday that is a fun token. Like, what do you think of this? Just out of curiosity.
Look, my view on Zora is that I've seen a number of pitches for what they're now that are similar to what they're now doing, which is you can tokenize any kind of content and trade it. Right. I actually saw a lot of pitches like that in 2021, back in the NFT kind of content, creative artist heyday, back when that was the vibe of crypto. At the time, I thought maybe, who knows, maybe that might work. Today, I think that probably is not going to work. That being said, do I begrudge them for trying it? No, not really. No. Not at all.
Yeah. I think it's fine. Okay. So maybe that's a really good point for me to now work off of. I think this industry has taken this view, and I'm not really here to make a moral ethical argument. Okay. I'm not making that point. I'm just making a point that what I have observed is a lot of this experimentation and innovation and trying things. And it sounds so flowery, and there's these narratives that can be woven around, we're experimenting, we're on the bleeding edge of this stuff. And, I have no objection to experimentation and innovation. I know you would think that my cynicism is just
not what it sounds like, but okay.
But I don't think experimentation and innovation should come at a zero-sum game. And that is basically what I have seen. And I said the Zora thing yesterday because they launched a token. I don't know what it is trading at now, but it was a $200 million valuation. And they literally said this is a fun token. Now, to me, it's just again, I'm not here to, feel sorry for the downtrodden retail investor, but it's what are we doing? What is going on here? Why is this experimentation? Why is this innovation? We've tried stuff like this before. This is such a marginal improvement, maybe, to Pump.fund,
to be clear,
to Friend Tech, to all of these things. And so I really take this stance, and it's an extremely reductive and unquantifiable stance, okay? But I take this stance, look, if you create a ton of value and you are able to capture that value, you deserve it, okay? But you should not make a ton of money without doing something extremely valuable. And my overarching view is that a lot of times in crypto, people make a lot of money founders, early investors, VCs make a lot of money with something that is not that valuable. And one more step, the token in this scenario, like I'm throwing out a hypothetical here, the token is unable to capture that value. And so I look at this like, look, Apple goes out and launches a token, okay? And they put iPhones in the hands of 1 billion people worldwide. That to me is insane. They sell those, right? To people who never had smartphones, let's say, like make it like, wow, like value creation here, right? That is insane value creation, okay? If the token does not capture the sale, the revenue from those iPhones, it's a scam. It is no different of a scam than somebody pumping and rugging a pump.fun shitter. To me, I'm not going to sit here and say one scam is worse than another when if you create value but do not capture it, yet make a ton of money, it's a scam to me. It's just a scam. Okay. And
I'm not going to defend Zora. I didn't invest in Zora. I don't even know what their tokenomics are.
I went on a rant, but that wasn't like predicated exclusively on Zora.
I hear you. But this, like the kernel of your complaint is a moral one. And you said earlier, no, it's not a moral argument, but what you said was specifically a moral claim, which is that if you do not generate value, it's not okay for you to make money, right? That's what you said, which is a moral claim.
I am saying that there is a structural problem with the market. I'm not losing sleep at night.
You're couching a moral claim by saying it's a structural problem, but fundamentally, it's obviously a moral intuition that you have, right? And it's an understandable one. I think most people have this moral intuition, right? So let me ask you, why is it okay? And just to kind of poke at the intuition a little bit, I think you've made a lot of money investing into Bitcoin. And you're a trader, right? You trade. You make a lot of money trading.
Not really.
Fine. Let's say you're a bad trader.
Yeah, I am. And like all like to be clear, like almost all the money I made is from Bitcoin and then just like getting absurdly lucky. And I say no more than that. Like the outsized returns that I had in alts was like sheer luck. Like I look back on it, I was like, whoa, I was in the right place at the right time.
Do you think it was morally wrong for you to have made that money?
No, I don't. I don't fault.
But you didn't create any value.
Because I didn't launch these tokens. Like it really is I really do feel that participants in the market, like do whatever you want.
Your problem is not that they didn't create value because you didn't create value. You're fine with the way you made your money.
I didn't fill a bunch of shitty coins to people. I didn't try.
So it is about investor protection.
It's about the. it's about.
So I'm trying to understand this more, like, because you're making a moral claim now. Earlier in the show, you were not making a moral claim. Now you're making a moral claim. I'm trying to understand what is the moral grounding for your opprobrium toward founders.
Is it a moral claim for me to say like this market is all screwy and it does not work the way it should, and it rewards?
No, that's what you said earlier. It rewards malinvestment, and that's not a moral claim. Yeah, exactly. That's a descriptive claim, not a moral.
Then whatever like morality.
But you kind of gave away. You gave away the game when you said that it's wrong for them to do that. Well, that's a moral claim.
Okay. When I say okay, I do think launching a pump.fun shitter and rugging it is wrong.
I agree. Look, to be clear, I think there's a lot of things in crypto that are wrong. I'm not afraid of saying that. I'm not afraid to say that there are a lot of things that people do in this industry that is morally wrong and that we should not condone it. Right. And I've said that earlier on this show when you asked me about, people, lying about their float or doing all sorts of shady tactics. I say that publicly. I get roasted sometimes for calling out bad behavior. I think that's totally okay. And it's totally okay to have moral intuitions to say that if you made this money in a way that didn't create value, then you don't deserve the money. Okay. I think it's okay to say that. That being said, if you say it, you should be consistent about, that's true for the traders as well as true for all these other people. Now, if your claim is that these, founders like the Zora guy, let's take Zora as an example. Again, I don't know that much about Zora, so
I don't either.
Okay, fine. But like my claim is that Zora hasn't hurt anyone. As far as I know, I mean, I don't know. Maybe somebody got hurt on Zora that I'm not aware of. But my understanding is that people are mad because Zora is creating a stupid game, and people are mad because like optically it just looks really dumb. People are like, what's the point of this? Okay.
Yeah.
And I might even agree with that. I don't know. I don't play Zora. I'm not on the application. But my view, which is the one I articulated to you, is that, well, don't use the product. Don't use the product. Don't buy the token. Like, let the people who use the product and buy the token do that. It's up to them. Right? That's the libertarian that's the libertarian view. Your view that you just articulated to me is that no, it's not okay because they didn't create something valuable and they might make money from this. And that's not okay. That's the view you just articulated.
No, what the view I articulate is it should not be the case, as in the market should not reward making a tremendous amount of money without creating value. Does this happen elsewhere? Of course, but it should not be that way. And I think the dynamics of crypto either incentivize or do not punish the insane amount of extraction without value creation. So I'm saying the entire way that the market works is wrong. I'm not saying it's wrong to take advantage of it. I'm not necessarily saying it's, I'm separating my moral ethical argument here from saying this is a massive circus, okay? And XYZ founder did not create the amount of value to justify him being as rich as he is.
Okay,
and I
so
think
to be clear, with Zora, they did an airdrop, right? I mean, that's why everyone's mad. Well, they did an airdrop, right? So like, they didn't make any money yet. They didn't make anything, and obviously this token is underperforming, which is why everyone's clowning on them. So, like, what more is there to be mad about? Like, I understand why people are mad because okay, it's just funny and like everyone likes to take turns dunking on someone, but like, why are you mad at Zora?
Well, okay, first of all, like, hang on, I'm not mad. I'm not mad. I just think okay. I asked you about Zora because it seemed to me that this, I know you're not an investor, but I was like looking for your perspective on this team raised 600 million. Now they didn't
raise 600 million. They raised at
sorry. They raised at 600 million, and now they have launched a token that is a fun token.
Okay, look, I don't know what the token does, so I can't defend that. But like the rest of it, right? Of like, they launched a token's not doing well, thing is down, people are complaining that this thing is stupid. Let's imagine the token even did take cash flows, but they didn't have any cash flows, right? Which would be the same story, basically. My default view in most of these things that unless you're lying, unless you're defrauding somebody, is basically fine, and the market will figure it out. Clearly, the market has figured it out in that this thing is trading way below its last earned price. Who lost from that? The answer is the VCs did. The retail didn't lose. Retail got an airdrop. And now some people might have paid more in fees and they got in the airdrop, which, okay, like you took a risk when you decided to farm this thing or whatever you're doing. Like, you know, it's a game, right? You're supposed to be playing the game if you want the game. But right now, the only people who I can identify who've actually lost money are VCs.
Do you think the founders will make money?
I mean, they'll make more than zero, right?
Yeah.
I mean, probably. Yeah. How much money will they make? I don't know. Probably not that much. If it came out day one at 200 million and everyone's shitting on it. So, you know, I can't imagine that it's likely to.
What would you expect to be the founders allocation there? Like, it just from your deals, like, what would you guess?
Probably. I don't know if there's multiple founders, maybe like 4%, 3%, 4%.
Yeah. So, I mean, that's like 20 million or something. I mean,
no.
I don't know.
I mean, it's at 200 million, right? So if you have 3-4%.
I know it's paper gains right now. Okay. Yeah, like I'm just saying in theory, of course, no, are they going to get out? I have no idea, but maybe it pumps. Who knows? Maybe it pumps. Yeah. In which case probably it's because people like the product, but it's just like a fun token. And like, what are we doing here? Right? Like, why are they launching?
I don't know. Look, to be clear.
Yeah.
If that's the debate, you win. Or because I don't know what a fun token is. I'm
not trying to catch you in like I'm not trying to like gotcha. I'm just like, I'm pointing out that yesterday we had an example of a project, again, raises at $600 million. This is not like a trivial sum of money, right? And they launch, they get a bunch of hype.
To be clear, this was also a 2021 round, right? So this was like a NFT boom type round. Yeah, Zora was an NFT project back then.
Yeah. Okay. So, I mean, I just think like, you know, this idea that we all have this notion that these have some claim on cash flows at some point. Like yesterday, we saw a project drop a literal meme coin, and that was VC funded and raised, you know, at a very high valuation. Like, what are we doing? Right.
Okay. I don't know. I would not have advised them to drop a meme coin. Okay. So, okay, look, at the end of the day, the market agrees with you, which is why this token has gotten punished so badly. And obviously a $200 million token with, you know, whatever it is, like 20 million float or whatever it's trading, is a nothing in the context of crypto, right? I mean, it's like a drop in the ocean of the total market cap of alts even. So, the main story for alts, and of course, the one thing we didn't talk about at all, and you sort of alluded to it when you talked about Kyle Samani, is the meteoric rise of certain tokens that have done extremely well, like Solana, like SWI, like, some of these other assets. Why
is SWI doing well? Like, what is going on with SWI?
Not an investor in SWI, so I don't know. But like these tokens, one, retail participated in the ride up. Obviously, some VCs did too, but VCs and retail basically participated pari passu in most of the run up, because a lot of VCs sold early because they didn't, they didn't know that it was going to run up, or they didn't necessarily believe. And of course, with Solana, it ran up twice. It ran up once to 200, then back down to $8, and then ran up again. And obviously, that second time, entirely retail driven, right? So it's clearly not true that for all alts that happens. But it's also true, again, in the stock market, that there's very few companies that have that kind of behavior. You have the NVIDIAs of the world, and you have a few other companies that have these meteoric rises. It's not frequent, but these things, like, the VC part of the story is a small part of the overall picture of what happened to a Solana or what happens to a SWI. VCs are how you get from 0 to 1. But in order to actually become successful, you have to go from 1 to 100. And that is something that usually happens in the public markets, not in the private markets. So all that is to say, a full treatment of the question of, are VC investments valueless? Are tokens valueless? Are we all wasting our time here? Has to incorporate the winners as well as the losers, right? You cannot just fixate on Zoras or the story protocols of the world, because those are a minute part of the total market cap. It's almost nothing. Like all these things that are down the list, like we're talking about increasing Bitcoin concentration. It's also increasing Solana and Ethereum not Ethereum, but Solana and XRP and BNB concentration, because the fact that these things are outperforming. But these were initially alts. These were initially the things that were VC coins that were backed in the previous generation. And so it may well be that we're not going to see another Solana, or maybe there's one more that's going to happen sometime in the next couple of years. It may be that there's a bunch more. It may be that we're going to see the entire top 20 turnover. We don't know. It really depends on what happens going from here. And also, it's all path dependent, right? Solana went in the last 2 years from being worth almost nothing to being one of the highest returning investments in crypto history in public markets.
Okay. All right. I think this has been a fantastic conversation.
All right. Agreed. We should wrap it up here. I guess for the audience, I feel like we finally got through all the points of disagreement. So I feel like from here, it's up to the audience to decide which side they found more compelling.
All right. Thank you. It was fun. We really ran it.
We did. We went hard. I appreciate it.